at 42 3/8. In fact, our own technical analyst, John Murphy, said that the fact that Micron broke the $40 a share level and stayed there comfortably is a real positive going forward. And he said it looks like this rally in Micron may very well continue. Intel also performed quite considerably well today, up 3 1/8 at 149.5. Keep in mind, Intel has been under considerable pressure recently amid some suggestions that higher interest rates were coming, and as a result, investors speculated that some fast-growing companies, like the technology companies, would be among the first to really see a crimp in expansion. Next, LSI Logic also did well today, rising 1 7/8, and Texas Instruments also on the upside by 1 5/8. Earlier today, Robertson Stevens raised earnings estimates for Texas Instruments, so that helped that stock as well. That's all from here. Back to you.
Thanks, Maria. Maria Bartiromo, live from the New York Stock Exchange.
The nation's top toy retailer is defending itself against charges that it illegally tried to block sales of Barbie dolls, G.I. Joes, and other toys at lower prices. The Federal Trade Commission says Toys R Us conspired to keep hot toys out of so-called wholesale clubs that sell goods at deep discounts. The case went to court today in Washington, D.C. Peter Barnes reports.
The FTC says Toys R Us is trying to stop warehouse clubs like BJ's, the Price Club, and Costco from playing competitively in the toy business. At an FTC trial that opened Wednesday, government lawyers said the nation's largest toy retailer illegally used its dominance to force toy makers not to sell to the big warehouse discounters.
Consumers were cut off from access, from choice. They were unable to go and to buy the toys that they wanted at these clubs, and they were unable to get the prices, the low prices that the clubs were offering. That's what Toys R Us was worried about. Toys R Us was worried about its prices and its carefully crafted price image being undercut by these clubs.
The controversy is over a policy announced by Toys R Us in 1992. That year, the retailer, which controls about 20% of the $12 billion toy market, announced it might not stock any toys that manufacturers sold to wholesale clubs, which claim about 2% of the market. Toys R Us says it's perfectly legal for it to decide what it wants and what it does not want to sell.
They didn't want to be free-ridden off of, which means they didn't want to spend all this money carrying a full line of toys, warehousing toys, promoting toys, advertising toys, and then lose the sales to guys who came in and just wanted the best-selling items of the Christmas season.
But the FTC says Toys R Us muscled manufacturers in secret meetings and that the companies are afraid to tell the truth. Whatever the reason, within a year of the policy, some toy makers, including giants Mattel and Hasbro, were not selling any of their top products to the wholesale clubs. And if the clubs got top toys, they often came in special combo packages, like Barbie, along with several outfits that cost more and make price comparisons difficult. Toys R Us says the product decisions were made freely by the toy makers, which are siding with Toys R Us in the case. The judge is expected to issue his decision this spring. Peter Barnes, CNBC Business News, Washington.
Toys R Us finishing the day up 1 at 27 5/8.
Ceridian says it has reached an out-of-court settlement of an age discrimination suit. The company will pay 313 former employees $24 million. It will take a 15-cent charge in its first quarter to pay for it. Ceridian is an information and defense electronics company. It finished the trading session on the upside by 1 3/4 points to 40 5/8.
There could be some movement in the labor strife between AMR and its pilots. AMR Chairman Robert Crandall saying it's time to reach a labor agreement and end the dispute over wages and the flying of new regional jets.
We're way ahead of the pack here. We are not trying to save our way to prosperity. We want and we need the cooperation of our pilots. We're anxious to make a deal. But we have to have a contract that allows us to compete.
But Crandall gave no hint that there was any change in the company's position. Shares of AMR finishing the day up 2 7/8 at 83 1/8.
A couple of stocks getting hit hard today after some earnings warnings. Corporate Express announcing this morning that its fourth quarter earnings will not meet street expectations of 16 cents a share. It blames the shortfall on weakness in its same-day delivery business. In very heavy trading, Corporate Express finished down 8 3/16 to 10 1/8. At 10 1/8, I should say. And late yesterday, Broderbund Software says that its second quarter earnings would come in between 15 and 20 cents a share. That excludes charges. The street looking for a 31-cent gain. Broderbund finished the session down 7 3/8 at 23 1/8.
They are becoming an increasingly popular investment option for institutions and individuals alike. But hedge funds are not for everyone. That story and more when Market Wrap continues.
This program is brought to you by Culligan International.
When you consider the thousands of ways restaurants use water, it's no wonder thousands of restaurants use us.
Hey, Culligan man!
Culligan, the world's source for better water.
We're proud to announce that New York Life companies now offer mainstay funds in all their 401k retirement plans. Don't miss the boat. Call 1-888-NYL-401k for a prospectus containing more complete information.
Don't let love pass you by.
Why the Raymond James Financial Group? Because of our nationally recognized research.
As a Raymond James retailing analyst, I'm proud to be part of a team whose long-term research results are ranked #1 on Wall Street. How do we stay on top?
By carefully checking retail chains until we find the best fit, and then only recommending the select few stocks which we believe will outperform the market.
For our current stock recommendations, call 800-272-0568 today and learn why so many entrust their financial well-being to us.
Time management entails prioritizing, synergizing, reorganizing,
Earth to business guru. This is difficult. Well, at least Office Max, the office product superstore, is easy. Over 6,000 office products, plus Copy Max, with digital black and white copying, color printing, and desktop publishing at guaranteed low prices that won't make that vein on your accountant's forehead bulge. Free delivery, too. Talk about time management. Office Max, we go to the max for you.
It's 6 o'clock. Do you know what happened today? Maybe you heard some of the news, but do you understand the stories? Probably not. See, that's why we're here. On Bull Session, we're going to look deeper than the story. We're going to do more than just report business news. We're going to break it down. We're going to tear it apart. We're going to get into it. This is no ordinary news program. This is a way to make sense of the world around us.
Bull Session, every night at 6 p.m., only on CNBC.
Loosen your tie, and let's figure it out.
As the bull market ages, America's colleges and universities are seeking new and aggressive ways to continue achieving superior profits for their endowments. And many of them are investing big money in exotic hedge funds. But do these investments protect ivory tower institutions, or could they lead to financial losses? CNBC's Greg Miles reports.
When it comes to investing, America's universities and colleges by tradition have been conservative. That's changing. Many are investing billions of dollars in sophisticated and sometimes risky investments called hedge funds. Academic institutions hope that these funds will produce superior profits and cushion them from a steep fall in the stock market.
You can take risky investments like hedge funds that are extremely, in some cases, extremely volatile by themselves. But when you fold them into a diversified portfolio, it actually reduces the risk or the volatility of the overall portfolio.
Investors like George Soros have made hedge funds famous by risking billions of dollars to make money off sudden shifts in global currencies. Hedge funds also bet on commodities, interest rate trends, and emerging markets. Now, 74 colleges and universities have jumped in, investing a total of $3 billion of endowment money in these funds, most of it in the past 2 years. For example, Ivy Leaguer Yale has 8.9% of its portfolio, or $427 million invested in these funds. University of North Carolina has 19%, or $113 million. And Yeshiva University has a whopping 37%, or $162 million. Many of these funds offer strong profits at low risk by keeping speculation to a minimum. Also, hedge fund managers are slowly becoming more open about their practices.
You're seeing a willingness to effectively open the books so that the endowment or the other institutional players can do the due diligence that they find necessary.
But the big problem is that most of these unregulated funds remain highly secretive, and they vary widely in risk, management, and strategies. In the early 90s, many hedge funds suffered huge losses. Some experts say that colleges are courting big trouble if they do not have the expertise or manpower to assess, select, and closely monitor these funds' performance.
You really need to do your homework so you know what style you're getting into and how it fits with the rest of the portfolio.
Vassar College has achieved respectable results since buying into hedge funds 4 years ago. Vassar has 11% of its endowment in 3 funds, ranging from high to low risk. Its hedge funds have averaged 15% annually over the past 4 years, though that's still behind the 19% annual average for the S&P.
We have succeeded in our original goal of reducing risk, but we have not yet succeeded in our goal of boosting returns, although we haven't hurt ourselves either.
If the stock market plunges, more colleges will likely put their money into hedge funds. Whether they get the safety they seek is yet to be proven. Greg Miles, CNBC Business News, Poughkeepsie, New York.
More bad news for coffee drinkers. Coffee prices are continuing to percolate. Coffee future prices soaring above the $2 a pound level for the first time since October of '94. Prices have risen 80% since December. The reason? Increased demand coupled with dwindling world supplies. On the flip side, metals plummeted today, led by gold. It fell on news that the Swiss National Bank would sell several $billion of gold.
Preventing a computer millennium meltdown will cost the federal government billions of dollars. Getting computers ready for the next century is not just a government problem, though, but it will require a public-private partnership to solve it. Hampton Pearson reports.
On stage at the Commerce Department, computer experts played out their version of midnight at the turn of the century, hoping that ringing in the year 2000 won't mean lights out for government computer systems. With the clock ticking, there's heated competition for multi-billion-dollar contracts to fix the year 2000.